Hi everyone, welcome again to another financial analysis video with myself, Moeed Amin, and my colleague, Ted Wainman. Today we are looking at MaxCyte. So MaxCyte is basically they facilitate the engineering of a wide variety of cells, right? So they have technology in the platform that they license out to biopharmaceutical partners and help them in their drug discovery, development, biomanufacturing, and cell therapy. So if you think about some of the therapies, they sometimes need to test that in vivo, which is different to in vitro, and in vivo is within the cell. So they have a platform that helps these companies engineer a variety of cells in order to conduct their tests. This one was actually another one that was recommended or requested to us by one of our viewers. So ARC, here is your video, and I hope you find it useful, and do let us know of any thoughts, comments, or any other companies that you would like us to analyze. But before we go into MaxCyte, a couple of words. Number one, their stock price. So they floated in 2016. They're actually a US company, but they floated on the London Stock Exchange, and they're making submissions to float some of their common shares on the NASDAQ market. But currently, if you'd invested in 2016, and we'll show you this later on, so stick around, you would have seen an incredible rise in your investment. In the last year alone, the value of those shares have tripled. So stick around to look at some of the finances that may underpin that, and we'll share a bit more about our observation of the stock price and its value, and in terms of expenses as well. Second thing to note is, before we go into this video and the financials, don't forget to like, share, and subscribe. So especially for you viewers who are making requests on companies that you would like us to analyze, if you subscribe to the channel, you will get an instant confirmation or instant notification of when we publish that video. So without further ado, Ted, let's take it away and share with our viewers this interesting company here.
Okay, thanks a lot, Moeed, and good to see you. So yeah, just and also in another edition, we're looking at the financials here. We're looking at the numbers. We're not looking at the market. We're not looking at the business, the management, the pipeline, the business, the deals that they're signing. We're just looking at the financials. So I had a comment recently that said this was a very backward-looking video. Well, welcome to my world. You know, we are looking at the financials, and the financials tells us what happened in the past. We may infer what's going to happen in the future, but if you're using this for investment advice, then you need to do your homework. This is merely part of it, and you need to go and do the rest of the homework too. So you cannot rely on these videos as a kind of, your one-stop shop. That's not what we're here for. We're just doing the financial analysis. So worth bearing that in mind. And without further ado, here are the annual report and accounts 2020. So 2020, that's last year, backward looking, as we said. And we are going to be looking at MaxCyte annual report and accounts. So we're going to dive into the numbers. So if you want to get hold of these accounts, they're available on their website. They give you a lot more information about what the business is up to, about its strategy, the various technologies that it's deploying, how it's deploying it. Don't forget that this will be a kind of, a marketing brochure as well. So they'll put a little bit of a positive spin on it, but certainly I would use this and have a look through the comments that they're making. However, we're going to look at the financials, and we're going to start with the income statement. Now, a little bit bizarre, this financial statements. I haven't seen anything like this before. So we'll highlight this. It's not a major issue, but it's just a little bit of funny. You'll notice that they are that they're in dollars. Okay, so it's not in millions of dollars or thousands of dollars. It's in dollars. But then you'll also notice that every single number is rounded to the nearest $100, which I think, I have to admit, is really bizarre. So what I would probably have put is 26,168.9 and then just called it thousands of dollars, because actually this is incorrect, because this says it's in dollars and it isn't in dollars because it is rounded. So I just thought that was a little, I thought I'd highlight, because I have to admit, I've never seen that in all the years I've been looking at financial statements, but who knows, maybe it's a standard in the biotech industry. Anyway, Without further ado, let's look at what these numbers are telling us. So first of all, top line, sales looking pretty strong, 26 million, up from 22 million the previous year. That is a 21% growth. So that's a pretty strong growth for these guys, 21%. Cost of goods sold, really very low. That's only 10% of the sales price, which means that they're operating at a nearly 90% gross margin. Okay, so when you think about it, that kind of makes sense because the actual product that they're selling is pretty cheap. The real cost is in here. It's in the R&D. So what they're doing is R&D, lots of expenses. Today they're investing in the future, and then when they get that product, they sell it for a high price, but it's very cheap to produce, and they make a lot of profit. So quite difficult to kind of look at, this is a very static view, and of course what we're seeing here is that this trading account up at the top is telling us what's done in the past, either products that they've developed in the past and have now brought to market, and this R&D is really trying to develop the pipeline for the future. So once again, we'll reiterate, if you're looking for investment advice, then you want to be thinking about what is that R&D being spent on? Is it going to come to market? Do I believe the story? And if so, should I be backing these guys? Okay, if you're interested in this just from a financial statement point of view, then maybe that's not so important. And we see, so R&D is half of the overheads. The other half is on SG&A, so the sales, general, and marketing, the sales, general, and administrative costs, and the marketing in there as well. And unfortunately, that means that they are operating at a loss. Okay, so the R&D is really bringing them down. So they're operating at a profit, but the R&D is causing a loss. And that's a decision that they've made. So a 42% loss. You'll notice that there's no real interest. There's a little bit of interest down here, and if there's interest, there's going to be debt sitting on the balance sheet. So we'd expect to find some debt, and there's a little bit of interest income as well. And this line here suggests that maybe they're sitting on some cash. And again, we'll look at the balance sheet to see if that's the case. No tax, and the bottom line is a loss for this business, a loss last year and a loss this year. Okay, so there's our trading account. There's the income statement. Let's go and have a look at the balance sheet. Balance sheet comes just before the income statement for these accounts. Total assets, $52 million. And most of that is current assets, $45 million, a little bit of property, plant, and equipment. These are kind of, machines that go ping and test tubes and all that kind of stuff. And you'll notice the biggest number in their current assets is this number here, $18.8 million. Now, let's be careful here. Just below that, short-term investments. Short-term investments, that's basically cash as well. That's a bit like the difference between your current account and your deposit account. So when we're talking about the cash position of these guys, let's take these two numbers together. 18.5 million plus 16, that's 20, 30, 34, $35 million just sitting there. That's parked as cash. Very, very important for these guys. Considerably up from the previous year when they only had just over nearly $17 million. Okay, so they got a lot more cash. Now, if they're making a loss and they've got lots more cash, probably be doing some fundraising. A little bit of debt sitting on the balance sheet, but I'm guessing it's going to be share issues, and we'll see whether I'm right a little bit later on. So those are the assets. Nothing else really to sort of that jumps out at us. We got some accounts receivable here, a little bit of inventory, for example. So nothing really to kind of write home about. Clearly it's a balance sheet stuffed full of cash. In terms of the liabilities, here are the liabilities. So a little bit of sort of accrued expenses. Quite interesting here, deferred revenue. So they're getting a lot of their revenue up front. So they're obviously selling some of the products that they're selling. People are paying today to receive them tomorrow. So that's certainly going to help their cash flow. That's going to help their cash flow there. And then down here, we can see these are the notes payables. So this is the debt. sitting on the balance sheet, and that will be what they are paying their interest on. And then down the bottom, in terms of the equity, do this in a different color. Here's the equity. So we've got what they've raised plus the additional paid in capital, and they're sitting on cumulative losses. So the difference between these two numbers here is effectively the loss for the year. And you'll also notice that 96 has now become 128, which means that effectively they have been raising money through issuing shares. And we should be able to confirm that through the balance sheet, through the cash flow statement, and of course, the movement in equity. So let's scroll down, look at the movement in equity. Here it is. So the movement in equity, nothing really exciting jumping out of us for this one. Kind of what we'd expect. So they're sitting on a loss at the beginning of last year, 2019. They make a loss during the year, and the retained loss goes up. And that is then carried forward to the next year, to 2020. They make another loss, and you can see the loss is basically building up and building up and building up. And the way that they are funding that loss is by issuing stock. So here you go. They raised 28 million from issuing shares, and here they've issued about 12 million from issuing shares. So this is a company. It's going back each year to the shareholders saying, we've got some good ideas. We've got the pipeline. It's all ready. We just need some more money, for example. And once again, we'll say that your willingness to back this horse depends on your willingness to buy into the story. Strong company from a balance sheet point of view, lots of cash stuffed in the bank. If we think about we look at the cash flow, here's the cash flow and the cash used in operating activity. So they got negative cash flow of about nearly $9 million, but don't forget they've got about $35 million sitting in the bank. So if you're burning at $9 million a year and you've got 35 in the bank, then you've got 4 years worth of cash sitting there before you necessarily have to go back. So maybe they don't have to go back to the shareholders next year, but certainly unless they strike gold, unless one of these these products actually then starts to really take off, then they are going to have to go back. And at this point, we're probably going to get a comment from somebody who says, oh, you haven't done your research because blah, 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 blah. Okay, well, that's the point of this. Okay, that's what your research is to do, is to kind of find out, have they struck gold? Have they signed the deal? Have they developed it? Is it now kind of, are they starting to become profitable, for example? If you know the answer, stick it in the comments. I'm just looking at the financial statements. So here we go. Investing activities, be careful on these investing activities. So $16.5 million investing activities. No, it isn't. So if we look at the investing activities, actually what we see is up at the top, these two numbers here. This is purchases of short-term investments and maturities, or effectively sales of short-term investments. This is a bit like you putting $22 million into your deposit account and then taking $8 million out. Okay, this is not investing from the company. This is not buying property, plant, and equipment. So we need to ignore that and really say that the underlying numbers here say that they're just investing about $2 million in property, plant, and equipment, up from 1.3 million the previous year. Okay, so their cash is going up, but the problem is with the cash flow, the way this is presented, and this is because they have to comply with international financial reporting standards, they're not allowed to show the short-term investments as cash, which effectively they are. And then the final bit, financing, here we go. So there we see the company, they've been raising money, as we saw through the movement in equity, $12 million last year, $29 million this year. Little bit of refinancing going on. So this is kind of borrowings and principal payments. So this is kind of rolling over their debt. And that's really kind of the big numbers. So, at the end of the year, they've got this $19 million of cash or cash equivalents, plus those short-term investments, which is kind of matched again. So they're stuffed full of cash, but they are losing money. They are burning cash. They are raising money through the issue of share, which means that you are being diluted every time they go back to the market. You're being diluted, and you know, we got to buy into the story as to when does this, you know, when does this start to make money? When does it start to generate cash? When is it profitable? Because at some point you've got to do that, or you're hoping to get bought by somebody bigger than you, and you're kind of, you know, holding on for dear life, so to speak. So in terms of the share price, here is the, you know, as you mentioned, Moeed, the share price has, you know, you'd have made a lot of money if you were early investor, but hey, you know, the rear view mirror in investing is always clearer than the windshield. It's always easy to be wise after the event, if only. So what are we looking at? A price of 1.1 billion pounds, I think that is. So, you know, basically, they've got $33 million of equity. That's basically all cash, effectively. So you know, you're paying 1.1 billion for something which is, you know, almost pure cash. You know, 35 million of cash. And you know, so you know, you can look at, you know, 42 times sales. I don't know if that's a relevant one. I'm not sure how, you know, whether this is an expensive company or a cheap company. You know, I really don't know. It is what it is. I think really here, what I would say is that this company is going to fall over in the next 12 months. Okay, so financially, it's got a lot of cash in the bank, and that's got to be a good thing. It is burning cash, it's making a loss, but it does have cash in the bank. It does have history of raising finance, so it's able to tell a good story. And I guess that, you know, if it's got the right products when they're just about to come to market, then, you know, this could be a winner. But it kind of depends on that R&D, the pipeline of the products and the research. There we go, Moeed.
Yeah, that was a great summary. And so, you know, what are your thoughts, everyone? You know, if we have any people who are experts in this particular part of the biopharmaceutical industry, you know, do leave your notes in the comment section, share with us your thoughts, and as always, like, share, subscribe if you have any companies that you would like us to analyze the financials for, so that you can get smarter and savvy on how you can read some of those financial statements and look at the retrospective as well as the forward-looking information that you're gathering for your investments. Or if you simply want to learn from us about a company that you wish to do business with and you would like to look at their finances to understand the decisions that they're making, then do leave a note in the comment section. So until the next video, thank you, everyone. Thank you, Ted. We'll see you soon.
Good to speak to you, Moeed. See you later.